Hey, good evening, fam. Good evening, family. Welcome in. Welcome in. Tonight is going to be very educational tonight. Tonight is going to be very educational, and I hope you guys have your notepad out tonight because you're going to learn a lot, and hopefully, this will answer all your questions that you may have had about life insurance. Because I know it can be a very confusing topic for a lot of people, right? Tonight, we're going to talk about something that every household needs, but almost nobody understands, and that's life insurance, right? That is life insurance we're going to talk about today. Listen, hopefully, everybody had a wonderful day today. Um, I'm not sure where most of you guys are at, but hopefully, you guys kept warm, right? And listen, I promise you, by the time this live is over, you know more than 90% of Americans about how the wealthy protect their families and build tax-free wealth all at the same time, right? And here's the deal. Um, One of the reasons why I decided to do this today, and I do my lives for many, many reasons, right? But lately, I've been watching or hearing a lot of people getting on lives, and how do I want to put this? In a way, they're getting on lives and they're trashing cash value life insurance, right? They're talking bad about the IULs, right? Or whole life, right? And here's the deal. To me, at the end of the day, everybody's different, and they have these products for a reason, right? The IUL doesn't fit everybody. It can, but it doesn't fit everybody. But with enough education, your client can over time, be a part of it. But when you have these companies, these agents who are going out and talking bad about um, a particular product, they're actually out here putting out misinformation and miseducating people. That's why I want to do this today, so you guys will have a better understanding as to how these policies work and what are the purpose of these policies, right? Again, tonight we're going to go over the different types of life insurance. That's one. And also what really happens when your term policy expires, right? If you're on here and you have life insurance, whether it's at the job, which is a term policy, or whether you have insurance outside of work and it's a term policy, put in the chat term, right? If you have a term policy, I want you to put in the chat term, because a lot of people don't know how the term works. And sometimes the term has been misrepresented by your agent. So some people believe that they have a policy that's going to last them forever, right? As we're going into this, right, I want you to remember something. Whenever, and I'm not going to name the specific company's name that do this a lot, but they have the terminology buy term and invest the difference. Some of you guys who have their policies know who I'm talking about. Buy term and invest the difference. When this live is over, I want you to think about something. And then I want you to call that agent and ask him this question. If you tell me to buy a term policy and invest the difference, what happened after that term runs out? You understand? Because their thought process behind all this is you should have built up enough wealth that you're now self-insured. Well, we know that the average retirement statement right now in America, the average retirement account is $183,000. Most Americans can't afford to retire. So if you don't have any life insurance, you barely have enough to live off of, and you pass away, what do your family get? That's the question I want you guys to ask your agent if you have a term policy with them, right? What happens if you should pass away? What happens if you should pass away and you no longer have life insurance anymore, but they tell you you should be self-insured? It's almost like they're playing a guarantee game. It's almost like they're saying, you know what, we guarantee you that the way we're going to put it together for you is the way it's going to happen. And life doesn't work out that way. Trust me, I know. I've delivered enough death benefit checks to know. I'm sure they are planning on being here to their age 90 or 100, but it don't work out that way. Right? So when these people tell you buy term and invest the difference, I want you to now ask them, okay, no problem. What happens to me if, let's say I'm 35 years old, I buy a term policy from you for 30 years. After 30 years, you say I don't need insurance anymore because I should be self-insured. Now, let's say now I have $500,000 in the IRA that you opened for me. Is that money mine, or that's money that goes to my family? See, this is where they get you. They tell you that buy term, and then over time you should accumulate wealth that you become self-insured, so you don't need term anymore. No problem. Again, so now the money I accumulate, because in my mind, I'm assuming that I'm going to use that money during retirement to survive off of. Okay, cool. So if I'm 65 and I live to 85, I'm probably going to most likely exhaust that money. Now, what happens to my family when I pass, since I no longer have insurance anymore? Listen, if you're watching this live right now, I want you to reach out to your friends and family, have them join this live. This is education time, because a lot of people out here are getting bamboozled by some of these agents. A lot of people out here are getting bamboozled by some of these agents who don't know what they're talking about. And especially, and I hate to say this, especially in our community where we already don't transfer wealth already, but they're telling you to buy term, and then you should be financially secure by the time the term is over, that you don't need insurance anymore. You're self-insured. And again, based on data, the average retirement account right now in America is $183,000. And I know this is true because I don't know how many annuities or how many 401k rollover or TSP or 403B that I've done this year alone. And that number is right on point. There was only one gentleman that was above $500,000 that I did. The rest of them, 110, 180, 50 grand, 75 grand. I don't call that wealthy. And if that person should pass away, they're going to leave the family with absolutely nothing. So that idea, that concept doesn't work. If, again, you're on this live right now, please call your friends and family. Have them join the live. You're on this live right now, and you know people that have these policies from the company that tells you buy term and invest the difference. And I'm not going to name their name, but if you have them, you know who I'm talking about. These are the key questions that you should be asking these agents. Okay. Number 3 is why renewing term rarely makes sense. Right? As a matter of fact, as you're watching this right now, I want you to take out your phone. Well, you might be on your phone right now, but later on today, I want you to Google percentage of term policies that pays out. I want you to Google percentage of term policies that pays out. Only 2% of term policies ever pays out because people usually outlive it. People usually outlive it. And in my mind, it's almost like you just give the insurance company free money. The average male is going to live to 82. That's the new number, I believe. The average woman, 87, 89. The average woman is going to live to 87, 89. Most of these people are going to outlive these term policies. And listen, this is the prime reason why 48% of the country don't have life insurance. This is one of the reasons why 48% of the people in the country don't have life insurance. One of the reasons, because they outlived it, and now they have to get the new number. They have to get a new pricing now. Think about it. You're 30 years old, you buy a term policy for $500,000. That policy probably costs you $65. Now, 30 years later, okay, you still need insurance cover because guess what? You didn't build the wealth that they tell you was going to build. And now you're looking at your wife. Now you're looking at your mortgage. Now you're looking at your grandkids and say, oh my God, I need to make sure something happens to me. They're going to be okay. Now you call your agent back and say, hey, I need to get that policy again. And now they have to give you a price for a 65-year-old. And you turn around and now say, oh, no, I can't afford that. This is why you see a lot of people walking around with $25,000 in life insurance, $40,000 in life insurance, but they still have a mortgage balance of $180,000. They still got a wife. They got children and grandkids because some agent have sold them on buy term and invest the difference because you don't need life insurance anymore. That is the most silly thought process I've ever heard. That to me doesn't make any sense. The essence of this is you leaving an inheritance. So why would you cancel or why would you get a policy, right, that is going to run out just because somebody tell you, oh, if you follow this system here, we're going to guide you to wealth, and then once you have what? Let me tell you why even that doesn't make any sense. Rich people have life insurance. Rich people have wealthy people have life insurance. So if wealthy people have life insurance, what does that tell you? That no matter how much money you have, you still should have life insurance because the more the merrier. But they use life insurance as a leverage just in case my plan doesn't work out. Let me tell you this. Truly, what cash value life insurance is is just in case my plan doesn't work out. If you get a term, you're gambling. If you get a term, you're gambling. Cash value life insurance gives you the guarantee that just in case my plan doesn't work out, my family will still be okay. Because a cash value policy will take you all the way to age 100 plus in most cases. On the average, a term will probably take you no more than age 85. In most cases, that's about it. You know what I'm saying? If it even does that, if it even does that, because if you bought your term at age 35 and now you're 65, you no longer have coverage. Most term goes to 30 years. That's it. After that, you have to reapply because you're not going to pay the renewal rate. It's going to be mad. You'll be going from $65. If you say, you know what, I'm not going to cancel my term, I'm just renew it. Let me tell you what happened. And you guys, again, if you're watching this, take out your policy. If you have a term policy, call your agent and say, hey, after my term is over, how much would it be for me? On the average, if you're paying $60 right now for a policy and it goes into renewal, let's say 25 years later, 30 years later, it might end up going to 300 something bucks. The following year, 400 something bucks. The following year after that, 500 something bucks. And it goes on and on because it's renewing every single year. Most people don't ever do that. They will call and cancel and now want to get a new policy. But also the problem with that is now you're 30 years older. Now you're 30 years older. You are getting the price point of a 30-year-old individual. And let's pray no health condition has happened to you. Let's pray you didn't have a heart attack in that 30-year time frame. Let's pray you didn't develop diabetes within that 30-year time frame. Let's pray you didn't have a stroke within that 30-year time frame. Let's pray you didn't put on 40 or 50 pounds. Let me tell you something. At age 20, I was 180 something. At age 48 right now, it was a point I got to 253. I'm now down back to 227. Okay? So as you age, you're going to put on that weight, which is going to affect your cost because the way they gauge insurance is, height and weight is also a factor. Age is a factor. Okay? Your health condition is a factor. How much you're buying is a factor. I had to do this live because I was seeing that a lot of people from this particular company, again, I'm not going to name their name, are doing our community a disservice. This is the reason why most of the people in our community don't have life insurance. Because some agent has sold them on buying a term policy, and then a few years later, they're supposed to get wealthy by them putting them into a mutual fund or an IRA. And it never happens that way. It never happens that way. We're going to learn tonight the types of insurance wealthy people use. I'm going to just let you know right now, it's an index universal life. Okay? And also how you can position yourself and your family for generational wealth starting today, right? Let me ask you guys in the chat, why do you believe most people don't understand insurance? It's a question. It's a question. Why do you believe most people don't have insurance? Let me start by saying this. Most people are just simply misinformed. Not because they're careless, right? But because nobody ever broke it down to them in a way that makes sense. Insurance is a real simple product to understand. It's not that simple. I'm sorry, it's not that hard. depending on what kind of insurance you have. It's not that hard. I keep it real simple. You get a policy, you pay them, you die, they pay your family. That's on the basic level. Then there's other policies that have things attached to it, like living benefit, right? So again, you pay them and you fall sick, they pay you. That's two. Okay? Most term policies, well, let me not say most. Some term policies will have those two things I just mentioned: life insurance and living benefit. So let me repeat again. You pay them, you die, they pay your family. That's one. Two, you pay them, you fall sick, they pay you. Okay? That's in the sense of term policy, simplistic. Then we go into a cash value policy or a IUL. Okay? And that has the three things the two things I just talked about with one extra addition to it. Okay? Let's go over it again. With the cash value policy, whether it's a whole life or a index universal life, you pay them, you pass away, they pay your family. One. Number two, you pay them, you fall sick, they pay you. Okay? Three, if none of those things happen to you, now you say, whoa, okay, I'm still here on this planet. I'm retired now. Where can I get additional income from? Oh, my policy has $500,000 in there. You pick up the phone and call the insurance company. Hey, can you send me this amount of money every single month to supplement my 401, my annuity, my Social Security? And they start to send you a check. It's nothing hard about this at all. Right? That's the cash value policy. Three things inside the cash value policy: your life insurance, you pass away, they pay your family. Living benefits, you fall sick, they pay you. Third, you retired, they pay you. Okay? That's the cash value policy. And that's essentially how this thing works. Right? When most people think of life insurance, they instantly think about somebody's dying. They instantly think somebody has to die before they can get any benefits out of it. But wealthy family know it's actually about living well, building wealth, and protecting your health and leaving a legacy. Life insurance, especially cash value life insurance, is probably the best thing you will have in your portfolio. Is the top of the top. It's better than real estate. It's better than the IRA. It's better than 401k. It's better than stocks because it solves all of life problem in one package. The Rockefeller became who they are because they had a cash value policy that they had pulled money out of at a particular point to build businesses. And they just kept on buying more and more and transferring to their family and transferring. That's why they are who they are right now. A term policy will have never allowed them to do what they did. McDonald's, the same thing. When the banks wasn't giving him any more money, right? He turned to his cash value policy. Disney World is here because of cash value policy. Right? Disney World is here because of cash value policies. But some of these companies will try to tell you buy term. I'm not saying anything wrong with term. I actually do what's called a blend sometimes, especially if I'm dealing with a young couple. So what do I mean a blend? If I meet a 30-year-old that is married, 3 or 4 children. As a matter of fact, I'm gonna give you an example. I did this last year. Okay, I have a husband and wife. One is a doctor. One is an IT person. Okay, their total life insurance need was $2 million for each one of them, but they couldn't afford a $2 million IUL. It was just way out of budget. So I did a 30-year term policy for them. That's convertible, by the way, with the plan. I'm not gonna go over that, today. And then I did an IUL for $1 million, which allowed them now to have the total $2 million. And what that does is it buys them time, especially on the term side, that as that child grows up or whatever, okay, if something happens to them, at least they know that, hey, we have this money here. If the husband passed away, the wife get the money. If the wife passed away, the husband get the money. That way they can take care of the household and the family. So I will do. I'm not against it, but I would never tell a person do term, don't get an IUL. That makes no sense at all. It doesn't make any sense at all. And again, this is if we're talking about transferring wealth. We're talking about generational wealth here. To me, if you're not, and there are people like that who are out here who are not concerned about leaving their kids. I have one client who specifically told me to my face, I'm not leaving my kids any money. You understand? I'm not leaving them any money. So there are people like that who function that way. But for 90% of the population who do care about their kids, who want to leave money to their kids, a cash value policy make more sense because you're going to live, in most cases, a long life. You don't want a situation where you live longer than you plan. You know what's funny? It's typically the ones who say, "Oh, I don't need this. I'm probably not going to be here too long," are the one who lives the longest life. They're typically the one that God blessed, and they're here to 100. They're here to 100. Listen, and let me go with some data with you guys because I love data, right? According to LIMRA, 60% of adults have life insurance, but only 20% of them have the right amount. So let me read that one more time. I'm going to break that down for you real quick. According to LIMRA, 60% of adults have life insurance, which means 40% don't, right? And then out of that 60%, 20% only believe that they have the right amount, which means out of that 60%, 40% are highly underinsured. And I know that's a fact because most time when I go into a home to see a client, either they don't have any insurance, or if they do, they have $25,000, $30,000, $50,000, $100,000, but they have a mortgage that's $500,000. They're married with kids, and they're walking around with, let's say, $100,000, but they owe the bank $500,000. They have young children. They got a spouse. So I would ask them, I said, hey, you know what? Hey, John, let me ask you a question, John. Let me ask you a question. So you have $100,000 in life insurance, right? He said, yeah, I got $100,000. Yeah. I said, let me ask you a question. If you pass away today, how's your wife going to pay this $4,000 a month mortgage? John's like, huh? He's like, I'm leaving her $100,000. Okay, no problem. After a funeral, you leave her with $75,000. How long you think $75,000 is going to last your wife on a 30-year mortgage? Okay, cool. Then we get the kids, right? Your wife make 80. Okay? She got 3 kids, okay? A mortgage of $4,000. Again, John, how long you think $100,000 is gonna last your wife or allow her to sustain or stay in this wonderful neighborhood that you're living in? It's a legitimate question. This is a dilemma that most people are going through and don't really understand. They think because they have life, a lot of people think just because they have life insurance is enough because they could bury them. Great. You're gone. You're on your way to go see Jesus. No problem, right? Or whatever you believe in, right? Now you've left people behind that was dependent on you. Lastly, almost half of all adults admit they don't understand the difference between the different types of life insurance. Listen, fam, there are three main types of life insurance, right? And I'm gonna break it down in plain English for you guys tonight. Okay, and I've talked about a couple of them. Okay, but I kind of want to go in depth a little bit. That's the reason for this call, so you guys don't start getting bamboozled by these particular agents out there who are selling you on just one thing, right? Because to me, one thing can't fit everybody. Everybody's different. Conditions are different. Family is different. Goals in life are different. So when they're selling you on this buy term and invest the difference, and they have no other options for you, run. Run. I market different type of insurance from different type of policies. I'm a broker from different companies. I don't just market one company. I don't just market one product. So when you have these people who come to you and don't offer you options, but tell you to just buy one particular company, one particular product, that's a problem. That's a problem. Let me go over these policies with you so you guys can kind of have an understanding. The first one, which I've talked about for the past 10 minutes or so, is a term policy. It's like a rental insurance. It's like the best way I could explain the term is like you're renting an apartment. Okay, you buy the policy for 10 years, 20 years, or 30 years. It's cheap. It's a temporary insurance because it's not permanent. Okay, and when it expires, you get absolutely nothing. Okay, and like I mentioned earlier, I hate to say this as an insurance agent, but real is real. When you buy a term policy, it's in a sense like you giving the insurance company free money. Because we know only 2% of term ever pays out. So 98% of y'all will be giving the insurance company free money. Because they know that you're going to live. If you're a female, they know the high likelihood that you're going to live to 87 or 89 is high. So they'll take that bet all day long. Even if you are 50 years old and you want to get insurance and you get a 30-year insurance, they will take your money and run up the hill laughing because they know that you will be paying them free money because they know you will outlive this policy. That's listen. This is so simple. This one of the reason why a permanent policy, cash value or IUL may cost a little bit more because they know there's a guarantee. There's a guarantee that they're gonna have to pay your family. They know that it's almost guaranteed that they're gonna have to pay your family because most cash value permanent policy will take you all the way to age 100. So, and again, if you're a female who buys a IUL, a whole life, at age 50, the price is going to be a little bit higher because they know that there's a likelihood they're going to have to pay your family because they know that you probably going, that policy is going to outlive you. That's one. They know the average woman live to age 89, 87, 89. So they know that they're going to have to pay your family. That's one of the reasons why the price might be a little bit higher than the term because the term is cheap for you. You take the bet from them, and what's that bet? They are betting you that hey Jane, we are betting that you're going to live longer than this policy. And Jane is betting the insurance company that I'm betting you I'm not. And insurance company say, we'll take that money. We'll take it. Because based on data, they know that the average woman will live all the way to age 87, 89. So if you're 50, your policy expires, let's say the 30-year policy expires at 80. They know it's a high likelihood they're not going to have to pay you. Unless some freak accident happen, unless you fall sick or something like that. But in normal cases, they know that they're not going to pay you. So they're taking your free money every single month. Imagine renting a house for 30 years and walking away with zero equity. That is a term insurance. If you buy a house, for example, you actually buy the house. You buy a house and you're paying into it, you're going to get equity. 30 years. Even if the house is in a bad neighborhood, it's no way 30 years go by that you don't get some form of equity when you buy a house. But when you get a term policy, it's like you are renting a house for 30 years. And once that 30 years is over, you no longer have a policy and they don't give you nothing either. Listen, again, as you're watching this, I want you to get people on this live right now. This is Education Day today. When we're done with this, you shouldn't say, I don't know a thing about life insurance. This is educating you today that now when you meet that agent, you can understand how this thing works. When that agent tells you buy a term and invest the difference, you can say, okay, great. But what happens if it doesn't work out that way? What happened to me after 30 years to my policy? And they have to tell you, oh, you no longer will have a policy. You have to reapply. First of all, that's the first thing they're going to tell you is you have to reapply because you know what? They're not going to show you the renewal rate. You're going to kick them out your house. They're not going to show you the renewal rate. You will kick them out of your house. The second policy is whole life. It is pretty much the old school permanent insurance policy. It was the very first permanent life insurance policy. Okay, not too many people use it like that anymore. Okay, but what it does is it builds guaranteed cash value. It stays with you forever, but it grows slow, is expensive, and is not that flexible because the interest rate you're going to earn in most whole life is about 4%, which is below inflation. So you're not really making headway, right? That's a whole life. Then the next one is number 3 is an index universal life policy, which is where I put my client in most cases. It's the most powerful tool in the insurance industry today, right? And listen, this is where it gets good. This is where it gets real exciting, because the IUL gives you lifetime protection. It covers you all the way to age 100 plus. Most of my illustrations that I've run is going to show illustration of this thing covering you all the way to age 120. So it's going to outlive you, right? Some of you who are watching this are probably from the South. These people from the South never dies. These people from the South be living to like 90 or 100. So listen, when I see people from the South with these term policies, I'm like, why? You're gonna be here forever. You understand? So the IUL, it gives you that long-term protection, which means guess what? It will outlive you. It will actually pay out. Okay. Number 2 is tax-free growth potential. That's your cash value, your savings, right? That you're going to have inside the policy. A lot of people use this as the retirement income supplement. As a matter of fact, some people fund this way more than they fund their 401k. For the simple fact that the 401k is taxable, the IUL is tax-free. Let me explain. I save 500 grand in my 401k, right? Now I'm in retirement. Now I need income to live off of. Well, I never pay taxes on that money. That's the principal and the growth. Now the IRS say, okay, no problem. You're retired now. So are we. We are your silent partner in this plan. So you owe us 35%. That's the 401k, right? Now the IUL, the same scenario. You save $500,000 in the IUL. Now you hit retirement. Okay, you have no silent partner. Everything now is 100% tax-free to you. So I keep it simple. 500 grand in 401k. Okay, you're gonna end up giving the IRS roughly 150k plus about 35%. So 150k plus goes to the IRS. Cash value life insurance, 0 taxes. You get to keep that extra 150k. So you actually get to have more money in retirement than the person with a 401k. With the IUL, you also avoid the ups and downs of the market. When the market crash, guess what? You don't lose a penny with the IUL. With the 401k, just ask people what happened in 2000, 2008. Ask them. A lot of people lost 30, 40% of their retirement savings. But people that had the IUL didn't take a loss. With the IUL, you also have living benefits. Again, if you fall sick, they pay you. Let me explain that, because a lot of people don't understand how really important this is, right? Most people, 70% of the people from the age of 67 on up will need some form of long-term care. I'm going to say that one more time. 70% of the people between the age of 67 and up will need some form of long-term care. So with your IUL, God forbid you fall sick or you need some kind of care or you need to be in an assisted living facility, or you need a nurse aide to come to you, because, okay, I don't want to go into a living assistance situation. Okay, I want to stay in my house. Okay, cool. We got to pay for a nurse to come to you. It over here in Maryland, that's about $4,800 a month. If you go to an assisted living home, that's $105,000 a year, right? So listen, the IUL allows you to get money or trigger your life insurance benefit while you're alive if you fall into a situation like this. I'm gonna give you an example. One of my homegirls that I've known for 30 plus years ended up having cancer 2 years ago. She's been a client of mine for 10 plus years, right? We immediately filed a claim. She had up to 90% to be able to get from her policy, but she only took out 1 year annual salary. So that way she could just stay home and just focus on her health while mortgage is getting paid, while condo is getting paid, while the kids are getting taken care of. That was her IUL policy. That's what the IUL does for you. You understand? And I got a story for days. This is not the only one. I had a client coming from Georgia the other day. Max, my dad is sick. The policy we did for you, how do we get the process started? My mom is struggling with the bills. And we called the company. She got the check, I believe, last week. This is why understanding the different type of policies that you're getting. Don't just listen. Just because it's cheap doesn't mean it's the best one for you. Most of these companies, these agents who are coming to you and selling you these term policies are selling you on your emotions. They're selling you on cheap. And that's why most people get it. And that's why sometimes when people fall sick in the family, they just in trouble. But if you had an IUL and you fall sick, for example, you can now turn around to the insurance company. Hey, can I file a critical illness claim? Can I file a chronic illness claim on my policy? And in most cases, if it's valid, they're going to get you a check in less than 10 days. This cash value inside this policy can be used for whatever. And that's what I love about it. You understand? Like, for example, your 401k, really to get access to it, you either got to be buying your first home or you got to be going through some kind of hardship. That's the only way. With your cash value policy, there's no stipulations at all. You don't have to explain yourself to anybody. Hey, I need $5,000 for my policy. Okay, which account do you want to send it to? No questions asked. Right? Now, I want to revert a little bit and go back to what happens when your term policy expires, which is what most people don't consider. They just buy it and hold on to it, and then they'll get a letter on the 29th year. Let's say it's a 30-year policy from the insurance company and say, hey, your policy is about to expire. Please call your agent to go over what's next, right? Family, please listen very closely to what I'm about to tell you, because this part is where most people get caught off guard. When your term insurance expires, you have 3 big problems. Number 1 is your premium skyrocket. That's number 1. You might have been paying $40 a month 30 years ago because you were younger. Now it jumps to $300 or $400. I've seen it. I've had clients call me. I've had clients who phone me their parents, and now the term expire, and they get this big new payment, and they're, oh, I can't afford to pay that. I'm on Social Security, right? Because in most cases they're older. So the price is going to jump up dramatically. Again, like I mentioned before, your health is also a factor, right? And sometimes your health might be so bad that you might be forced to keep that policy at the high rate because you're not going to get covered because your health is that bad. I've seen that happen. I've seen it where a client was referred to me. They were trying to get them coverage. They had supposedly a terminal illness. Supposedly the doctor said they had about, let's say, 24 months to live. But that premium was $480 something. And the wife was struggling to pay that. And there's nothing I could do for them. Because when you're in a situation where you're deemed terminally ill, no insurance company is going to cover you. So you're stuck in that scenario, which is crazy. Now, if they had let's say they had opened up a whole life or IUL 30 years ago, guess what they don't have to do? They no longer have to make a premium payment. Not only that, guess what? They can trigger the policy for additional income while still not having to make a once you trigger a terminal illness for your policy, you don't have to make a premium payment. Right? Let me tell you something. I love this policy. Right? Number 3 is most term policies, which I talked about, never pays out because people outlive them. So you've just given your money to the insurance company freely, without a return to you or your family. Less than 2. If you're watching this live right now, I want you to put in the comment if you have a term policy. Just type in term. Just type in term. Right? Most term policies, less than 2% ever pays out. Right? It's a brilliant model for the insurance company, but a terrible long-term strategy for families who are dependent on it. I have clients who have term, but trust me, is term life or whole life better? A whole life all day long. I have clients who have term policies, but every year they hear from me and we talk about converting over. Every single year they're going to get that conversation from me, converting over. Every single year they're going to hear from me. Because my job is to make sure that their family actually gets something out of this. Not just them paying a premium to the insurance company and they never get anything out of it. Right? To me, listen, as you guys are watching this, let me know if this makes sense to you guys. Let me know if what I'm saying right now makes sense to you. I know a lady who took out term insurance out on her husband. She lived past 20 years and she was hoping he will pass away. Fly, hey, fly, eagle, fly. I think your message broke out somewhere, but I think I know what you're trying to say. Yeah, listen, like that. I've been at this now for 18 years, and every time I meet a client that tell me the story of the term, oh, my agent told me I had an insurance forever. Oh, this, oh, that, and I just shake my head. Right? Let me tell you why the IUL is exploding across America right now. Number one, the main reason is the tax-free retirement income. And think about it for a second. Why would you want to bust your butt all these years, right? Why would you want to bust your butt all these years, right? And work your butt off and save money. She lost all that money she paid for the term insurance all those years. It was thousands of them. Absolutely. Absolutely. If you add up how much you're paying for your term policy for 30 years, and based on the information you're getting right now, and you know that, let me tell you something, the insurance company, they are laughing all the way to the bank. It's free money. It's free money. They know that the average person is going to outlive their policy. It's free money. You know what I'm saying? I listen to Dave Ramsey and he tells everyone, yeah, let me tell you something. Listen, if y'all listen to Dave Ramsey can say that because he's not licensed. So can nobody sue him? That's the only reason why he says what he says. He's giving out bad advice. And again, if you logically think about it, and this is free information, this is like you guys can go on Google and see this. If you logically think about it, these people, they tell you to buy a term and invest this and invest that. Well, the data shows that the most Americans right now, their average asset is no more than 100. And if you exclude the house, we talking about like a 401k or IRA, whatever, it's no more than like $183,000. So to me, if you only accumulate like $183,000, excluding your house, right? We're not gonna count the equity in your house, none of that stuff. We're talking about just a straight up portfolio, right, of your investments. You're setting your family up for failure. This is not gonna work. So to me, it's almost like the cash value policy in a way kind of like force you in a way to save money within the policy, right? And to me, there's no greater place to save your money than in an IUO because of the tax-free benefit by the IRS themselves. Under the IRS tax code 7702, you guys should Google that and look it up. The IRS tax code 7702, the cash value inside an IUO grows with tax advantage. The IRS put that in there themselves. This is why, let me say, I keep on saying this. Wealthy people are wealthy for a reason. They get this information. Oh, the life insurance does what? Okay, no, this is what I want you guys to answer me a question. If a person is rich, why do they need life insurance? Because they understand the tax code. They understand taxes. Taxes is going to rob you of majority of your money. And the wealthy knows this. So they put their money inside a place that will shelter them from taxes. But most of us are funding 401k that we know we're going to pay 35% tax on. I don't even listen. I need somebody to help me in the chat make that make sense. Okay, I know this is here for me. I pay no taxes. I know this is here and I'm paying taxes, but I'm putting my money in here, even though I know I got to pay taxes on it. Even though I know that if the market goes down, I could lose 30 or 40% of my value. But most people, it's surprising to me. It's surprising to me, right? I would think more people would learn from 2008, but they didn't. 2008 happened, people lost value in their 401ks and all that stuff like that. And 2012 came around, 2013, and they went right back into putting money in there. I'm like, yo, what? What? Number two reason why you want an IUO is market gains without losses is the best of both worlds. I can go up to a market. I could go up with the market up to a certain amount. But the market goes down, I don't lose a thing. So now we're talking about safety. We're talking about safety now, right? So I can sleep at night. I don't care what happens in the market. The market goes down, great, whatever, I don't care. It goes up, great, I'm happy. And then we've already talked about the living benefit side, which in the IUL, if you get like a heart attack, a stroke, cancer, any chronic illness, or massive injury, right? You can access your policy while you're alive to care for yourself or to get someone to come in to care for you, right? There's so many multiple uses. One policy can serve as a life insurance, emergency fund, tax-free retirement account, long-term care backup, college funding if you have children, legacy plan, wealth strategy in one policy. Let me read that for you one more time. This one policy covers your life insurance. If you pass away, your family get a check. An emergency fund, if something happened major and I need money right away, my money's not tied up in a 401k, whereas I can only get it if it's my first property or if it's an emergency. That doesn't happen on a life insurance policy. Just call them and say, hey, I need $4,000 or $5,000. I need $10,000. And they say, hey, which account? And they send it to you. Right? I shouldn't say this to y'all because it's probably bad advice, right? But my birthday was I had my birthday last year, and I've been looking at this car for a while. It's the S580 Maybach. And I initially didn't plan on putting any money down, right? But I went in there and the price, I was like, oh my God, I'm not trying to pay that a month. And obviously I put some money down. The money came from my life insurance policy, 15 grand. 72 hours, the money was in my account. One policy does all this. Tax-free account, long-term care backup, college funding, legacy plan, wealth strategy in one policy. In one policy. Right? Let me give you some real numbers here. According to LIMRA, index life insurance sales hit nearly $3 billion in new premiums in 2024. Let me say that for you one more time because you guys don't understand how crazy this is. Index life insurance hit nearly $3 billion in premiums. That's monthly premiums in 2024 in 1 year. That's the highest ever. The question is, why is that? A lot of people are getting the information that the wealthy have been using forever. And people are now heading that direction. People are moving away from term-only plans and moving into IUL because they want security and growth at the same time. It's the best of both worlds. Right? Let me give you guys a real life situation that happened a couple of years ago. Okay. This individual bought a 20-year term policy at age 35. At age 35. And at 55, so he was I think it was 55 when I met him. So he was 35 when he opened it, and the daughter had me to give him a call, so it was 55. And I believe they sent him a renewal letter, and he called the agent, and the agent started backpedaling. He said, "Hey, you told me my policy lasts me forever." It's like, well, technically it does, but you have to pay the renewal rate. It's like, I'm not going to pay this. The renewal rate, check this out, the renewal rate increased by 500%. And at that moment, Dad had diabetes. Insulin is what he used. I found him a company that would take him. we did an IUL. Premium was a little high, but he had no choice because he was denied everywhere else. Also, he had to get lesser coverage because, again, the premium was excessive because he's older and he's also diabetic with insulin. This is why I always say when you buy these term policy, you got to factor in your condition might not be the same 20 years from now, 30 years from now. This is why I'm not a fan of it. It just doesn't make any sense. And then for the simple fact that I know that I'm giving. So in my family, my grandfather on both sides was 90 plus. My grandmother on both sides were 90 plus. If you see my mom, you would think she's 40. So why would I get a term policy? It doesn't make any sense. It doesn't make any sense. So listen, I don't want to hold you guys up too long. I thank you guys for joining on this live stream, but I wanted to just educate you guys just a little bit today, right? And if you're watching this live stream and you don't have life insurance, let me tell you something. Life insurance is not like auto insurance. I had a client like that too in her 70s, term premium increase. Said, oh my God, $700. That's immediately canceled. She's not going to do that. She's not going to pay that. She's not going to pay that. That's crazy. Right? If you're watching this live today and you don't have life insurance is not like auto insurance. Auto insurance, the older you get, the lower your premiums be. Life insurance, the older you get, the higher your premium goes. So if you're watching this live right now, I'm going to give you my number, okay? Or either DM me, either one. But let me give you my direct number. Text me, 443-208-5480. That's 443-208-5480. And just text me and say, hey, can I meet with you? Can we talk about getting some insurance? Because right now, 48% of the country don't have life insurance, right? Right? Every day your health also change. That's a concern. Every day you wait is another day of risk. I just had one of my homegirl daughter pass away about 3 weeks ago. The saddest thing. And I felt horrible as an agent because I could have pressed her a little bit more to get coverage, but I didn't. I talked to her twice about it. She said she wasn't ready or she wasn't interested, and I left it alone. And her daughter passed. And she was calling me when the daughter was in the hospital because she was trying to get insurance on the daughter while the daughter was in a coma in the hospital. That's how sad the story was. And the daughter was 24 years old. So listen, if you want to have a conversation and you want me to run you personal numbers, again, text me 443-208-5480. That's 443-208-5480. Or you can email me at evolve@titanevolutiongroup.com. And again, you can always DM me. I'm usually on here most of the time. So you guys can always DM me. But yeah, today was education day. Today I was like, you know what? Okay, let me talk to the people. Let me enlighten and educate the people today. All right. So listen, thank you guys who were on. I really appreciate you guys, and you guys have a wonderful and blessed evening. See y'all soon.